And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here taking you through to that closing bell. It's a global simulcast. Tim Stanovic is off. Carol Massar is off. Katie Greifeld is off. We're the only ones working. Welcome, Alexis Christoforous, and Isabelle Lee here. It's just us three here as we count you down to those closing bells. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube. Alexis, Isabelle, it's great to see you, and I really thank you for filling in for Tim and Carol today. I guess just kicking their feet up today on what is a pretty volatile day in U.S. markets.
It is. Well, we figured we'd keep you a little company, Romaine. Didn't want to leave you out there in the cold all by your lonesome. But as you can see on the screen, everybody, a down day, at least for equities, even the Russell 2000, percentage-wise, the biggest loser there, down more than 1 1/3%. But I'm looking at Bitcoin. I don't know about all of you. I know we've got the after the bell.
I love Bitcoin, Alexis.
But come on, Bitcoin now below 65. Or it's about
Wow.
65,300. Yeah.
Okay. Yeah.
I mean, Bitcoin, it's still an important risk sentiment, so it's important to look at that. But I'm just looking at how markets have spent much of the year expecting inflation to cool, but, you know, inflation has still remained stubbornly elevated. So are investors finally going to accept that rates may stay higher for longer? I mean, I don't know.
Yeah, I mean, and this is obviously one of the big stories of the day. Of course, overnight, we saw a lot of issues going on in the Middle East that raised, of course, oil prices or raised interest rates on the benchmark 10-year Treasury. A lot of questions about what's going on in the private capital space as well. And that really put a bit of a chill on this market, which, we should point out, had been on a phenomenal run with the S&P we're just hitting a record high yesterday, coming off of 9 straight weeks of gains. We should point out we do get some earnings after the bell that maybe potentially could change risk sentiment, though the weightings, of course, might not change the trajectory, and that includes a big earnings report out of Broadcom as well as CrowdStrike. The Dow Jones Industrial Average losing about 600 points on the day, down about 1.2%. The S&P down 55 or 0.7%. The Nasdaq down about 0.9% on the day, and the Russell 2000, Alexis and Isabelle, down about 38 points or 1.3% on the day.
And we've also got some of our winners and gainers today. I was actually taking a look at Ulta because that stock actually took a hit today. It was down about 5%. Reported first quarter results that beat the street, but shares fell. Some are saying that investors are focused on the modest increase to the company's full year earnings guidance. So again, I think an example of a company where the bar was so high, it just couldn't jump over that hurdle because for all intents and purposes, Ulta's report was pretty solid, Isabelle.
It really makes you think consumer sentiment is near historic lows, but stock market is at record high. So how do you reconcile those two very different stories? I mean, we're also seeing delinquencies across credit cards, auto loans, and mortgages. And at what point does it become a broader market concern than like maybe just a financial household story?
All right, let's take a, before we get to some of the gainers and decliners here, let's take a look at the IMAP, giving you a sense here of the individual sectors in the S&P 500 here on this Wednesday afternoon here. You did see a bump up in the energy index. That is the big bulk of the green there as a group, up about 1.5%, largely because of that bump up in oil prices. You saw also in the green, consumer staples, also in the green, healthcare, also in the green, materials. Of course, not the type of sectors you want to see a bit of a defensive complexion with tech, the big red section of that circle there, down about 1.5%.
Okay, so even if I'm seeing red on the screen, there are still some bright spots. I want to talk about the gainers. Maybe let's first discuss Medtronic, ticker MDT. Shares ended the day higher by 5%. This is a medical devices maker. They reported revenue for the fourth quarter that surpassed expectations. Analysts noted that the 2027 adjusted EPS guidance will be in focus during the earnings call. Citi said that revenue guidance exceeded expectations, EPS growth consistent with prior commentary. Let's also now go next to MiniMed, MMED. Shares are up by nearly 16%. This is a diabetes device maker. So they reported fourth quarter net sales and a CGM attachment rate that surpassed expectations. MiniMed also said it plans to commercialize dual glucose ketone sensors with Abbott. So I always look at diabetes stuff because for my family, it's a matter of when you get it, not if. But anyway, moving on. Last is Navitas and VTS. Shares are up by nearly 20%. This is a semiconductor manufacturer, so lots of good news for this company. It has 2 buys, 5 holds, and 1 sell.
There are a few things that we're watching here in the after hours of trade, waiting earnings out of Broadcom, the chip maker, as well as CrowdStrike. We're also waiting potentially for an updated S1 filing out of SpaceX. Meanwhile, we are getting earnings out of Five Below. This is the discount retailer that had actually been rallying pretty hard into this earnings print. The company is saying saying that in its fiscal first quarter, comp sales were up. A phenomenal comp sales were up by 23%. The street was looking for 18%. Net sales $1.29 billion. The street looking for $1.22 billion on average. Adjusted EPS also beating that $2.22 a share. But here's your guidance going forward. The company saying is look for comp sales on the full year basis of 6% to 8%. The low end of that range is basically on the nose of what the street was expecting. Net sales of $5.4 billion to $5.48 billion, which is a little bit wider than what they had previously guided for here. And adjusted EPS of $8.65 to $9.05 a share. So basically what you're looking at is a beat and raise quarter. But remember, this is a stock that had rallied pretty hard into the earnings print here. So you see those shares down about 8%. We'll dive a little bit deeper to see whether there's something else going on underneath the surface there, Alexis.
All right, I'm going to stick with the theme of down right now and give you some decliners on the day. I spoke about Ulta just a couple moments ago. Want to shine a light on Global Payments. That stock in regular trading was down more than 8.33%. So some are saying that the stock's decline due to some street commentary suggesting second quarter estimates might need to be revised downward, but some analysts say those worries are overblown. Mizuho Securities sees the sell-off on Global Payments as overdone. They're recommending investors use it as an opportunity to buy on weakness. The analysts there saying there's no reason to believe 2Q guidance should be changing. They point to the fact that Global Payments CFO affirmed the outlook just a couple of weeks ago. And also, let's take a quick look at Palo Alto Networks as we wait for Broadcom's earnings to hit here after the bell. Palo Alto down more than 5.5% in regular trading, despite the cybersecurity software maker delivering strong quarterly results the prior evening. This next day move may seem a bit odd, given that the company did exceed expectations. All right, we've got Viva out with earnings. Let's see what Romaine's got for us.
All right, well, let's actually go to CrowdStrike here, the cybersecurity company where expectations are high after those earnings out of Palo Alto Networks yesterday. The company, I'm going to actually start with the forecast here because this does appear to be moving the stock. The company says expect revenue for the full year of $5.9 to $5.96 billion. That's a slight nudge up from its previous guidance of $5.87 to $5.93. So not a whole lot of movement there. Similar story with regards to its adjusted EPS number, $4.88 to $4.96. The previous guidance was $4.78 to $4.90 here. For the most recent quarter, they did beat, but only by about 3 cents a share on the bottom line for EPS in its most recent fiscal quarter. And on the revenue side, a slight beat there, $1.39 billion. The street was looking for $1.36 billion there. So maybe not enough juice there to accommodate the run-up that we had seen in those shares, down about 7% here in the after-hours trade.
Maybe, and also it could be that Palo Alto sank today because it is up 50% year to date. So maybe some investors taking a little money off the table.